If you put your money in the bank, it's not your money anymore. It's the bank's money, and they'll give it to you if they feel like it.
We're in the last days of this country surviving.
We are still in the aftermath of 2008.
This could be the most serious recession in decades.
There was no time to be mad. We were looking at hours, maybe even minutes away from the sequential closure of every stock and bond market in the world. Nothing was solved. All that happened was the debt was lifted from private hands to government hands.
Down by 9%, the Paris market down by 9%.
If things change, they change for the worse. In 2008, the central banks bailed out Wall Street. In the next crisis, who's going to bail out the central banks?
Our economy is the envy of the world.
Trump's odds of winning re-election are the inverse probability of a recession between now and the summer of 2020. There may be a collapse, and I'm forecasting that. Something will emerge, and you could actually be one of the thought leaders. You could be one of the people who lead the way out of the wreckage. You can help us avoid it or help us emerge from the chaos.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is Jim Rickards is a 35-year veteran of Wall Street and one of the smartest guys I've ever met when it comes to financial markets. But he also used to work for the US government inside the CIA. He has incredible books called Currency Wars and the Death of Money, and he is also predicting the next financial crisis. But what I loved about this episode was when he mentioned a massive government secret and how it can affect thousands of people just like you. Luckily, Jim's going to be going on camera in just a few days to reveal this 15-year-old government secret. Now, as you can imagine, this message is not endorsed by the US government, and so Jim asked me to keep this broadcast private. So only those on his list will get a chance to hear it. Now, as the London Realer, he's letting me offer you exclusive access for free. All you have to do is click on the link below or go to londonreal.tv/Jim and add yourself to the list. Now, once this goes live, you may never have the chance to see it again. Jim's risking quite a lot to share this message with you. He told me that he just can't keep it under wraps any longer. And I think you need to hear what he has to say. So click on the link below or go to londonreal.tv/Jim to sign up now, and I will see you at this exciting event. And now I leave you with this incredible episode with Jim Rickards. This is London Real. I am Brian Rose. My guest today is James Rickards, the American financial expert and author of the New York Times bestselling books, The Death of Money, Currency Wars, and The New Case for Gold. You worked on Wall Street for 35 years and now advise Johns Hopkins University and the U.S. Department of Defense, where you served as a facilitator of the first ever financial war games conducted by the Pentagon. Your new book, Aftermath, you explain how the biggest financial crisis is yet to come and reveal your 7 secrets of wealth preservation in the coming chaos. James, welcome back to London Real.
Great to be with you, Brian.
Great to have you here. Really enjoyed the last time you were here. So did everyone else. And hopefully we can go into new ground. First of all, what's it like being back in London? What's your relationship been like with the city over the years?
I've been coming to London since the late 70s. I've been here many times. But it does change. And parts of it don't change. Obviously the history is very rich, and whether it's literary, financial, or other historical elements. But there's always something new in London. I've seen some new buildings going up. Google's coming in a big way. New restaurants open. London's and this is an obvious statement, but a lot more cosmopolitan than it was when I first started coming here. It was pretty much, you couldn't necessarily find a good foreign restaurant, exotic cuisine. Now they're everywhere. So yeah, I mean, London survives, it morphs, it changes, and it's great to see the change.
And as a financial capital, how is it different than New York City, which you spent a lot of time in, obviously?
London has a lot more emphasis on foreign exchange trading. Of course, that's big in New York and Tokyo and some other financial centers, but London's kind of the home of that. Historically, the center of gold trading. Now we have gold derivatives, but I always remind people, if you trade gold futures or gold forward or gold options or gold ETFs, you don't have gold. You have a contract with somebody, and contracts can go their own way. But London, the physical market is robust. And London also is, it's because of Brexit, we can talk about that, looking further afield, always had a special relationship with the US, but as it's leaving the EU, it'll have to renegotiate that, but it's certainly looking to China, but there are problems in the US-China relationship and the Chinese economy that make that a little bit more problematic. So I think they'll do fine. My view on Brexit was always, it made sense for the UK to join the EU and adopt the euro, or keep out entirely. You could make an argument either way, but the idea of joining the EU and not adopting the euro, I always thought was unstable, and you're kind of half in, half out of the relationship, and it's turned out that way.
Yeah, well, I want to talk about Brexit a little bit later for sure. Trade wars. Really want to get your thoughts on that, because it's become very relevant in the last few months as we've seen Trump battle China. What's going on, and what are the potential ramifications for everybody involved?
Right. Well, the trade wars, I say, are right on schedule. And what I mean by that, in 2011, my first book was called Currency Wars. And the currency wars that we're in started in 2010. I love getting calls from reporters, like today or whatever. They'll say, hey, Jim, there's a currency war going on. I said, well, no, it started 10 years ago. This is just a continuation of the same currency war. But the point I made, we're not in currency wars all the time, but when we are, they can last for 10 or 15 or 20 years. So I'm not surprised that here we are in 2019, and we're in the same currency war that started in 2010, and that's what my book, Currency Wars, was about.
And what is a currency war, for people that might not understand?
Currency wars arise in a condition of too much debt, not enough growth. Because if you have enough growth, a big country like the United States doesn't care. It's like, whatever, you want to devalue your currency, who cares? It's small change. There's enough growth to go around. But if you have too much debt and not enough growth, you can't borrow your way out of the problem. And so you look for other techniques. And one of them is currency devaluation. So what do? You say, well, you're whatever, UK, Europe, US. You say, I'll devalue my currency. Well, what do you get for that? Well, you lower your unit labor costs, you stimulate exports and export-related jobs, and you import inflation because your people have to pay more because your currency is worth less.
And this is what China has been doing, or Trump was accusing China of doing.
Go back to Geithner. I mean, China was doing it, but so was the U.S. People forget the dollar hit an all-time low in August 2011. That was the all-time low for the dollar, not all that long ago. And then we sort of passed the canteen to Europe and let them take the euro. Euro was $1.60, and then it went down to like $1.03. So they got to devalue. So everyone's taking turns. But the problem with currency wars, they don't work. And the reason is that you get retaliation. So if one and only one major trading partner devalued the currency, it would work fine. And that was the old IMF system with fixed exchange rates. But now what happens is somebody else devalues, and then you devalue again, and they devalue again, and it becomes a race to the bottom. So after some years, people realize it doesn't work because any advantage is temporary and it's quickly taken away by trading partners. So then, and this kind of goes to your original question, Brian, then you go into trade wars. Say, well, currency wars don't work, we're not getting anywhere, so let's go into trade wars. And the theory is kind of the same. I'll put tariffs against your goods, that'll increase the price of imports, make exports relatively more attractive, et cetera. But that doesn't work either because you get countervailing tariffs. So you get a tariff war, a trade war, instead of a currency war, and we're in that now.
With China.
With
US and China.
Correct.
Yeah.
But Europe is next.
Okay.
Trump's going to put tariffs on German cars next month. So,
really?
Yeah, so this is going to spread. I do say the UK will be one of the winners because if you're going to pick a fight with everybody, you need a few friends. And I think Boris Johnson or the UK government will be one of his friends. But the point being, The problem with what I just said, and it is historically accurate and analytically accurate, is the sequence is currency wars, trade wars, shooting wars. Shooting wars solve the problem. Mass mobilization warfare, destruction of capital, and 50 million dead. Very good for the labor market, very good for construction, very good for recovery. Not a great way to get there, but history is that shooting wars follow trade wars. So let's hope that doesn't happen. Let's talk a little bit about the trade war. So we're in it. A lot of people say, well, this started in January 2018 because Trump put tariffs on solar panels and appliances, your refrigerators or whatever, dishwashers in particular. Well, yeah, you could say that, but I would say the trade war started in 1994 when China did a maxi devaluation of the yuan, continued through 2001 when they made a bunch of promises to join the WTO, World Trade Organization, and broke every single promise, continued through the early 2000s when they were manipulating their currency, and continued through 2016 where they were admitted to the IMF special drawing right basket of currencies, one of only 5, and lied to the IMF because they said we'd have an open capital account, and they shut the capital account the following year. So the history of China is they cheat, lie, steal, break every rule all along the way.
And this is what Trump kind of ran on, saying that we need a better deal with China.
Right. So what he did in 2018, I view as the U.S. finally got the wake-up call and retaliated. So if you want to say we started the trade war in 2018, fine. But my view is what we really started, we were going to fight back for a change.
Was it the right move?
Oh, absolutely. It's 20 years too late, but that was
How come no other president did that?
Because they're globalists. They were willing to see growth in China at the U.S. expense, even though they were American presidents, because they bought into a globalist view propagated by people like Jeffrey Sachs, who's like a serial killer of economies. So here
and you're not a globalist.
No. Okay. So here's the globalist mantra, and this goes back to the 1990s, and whether it's Richard Haas, Jeffrey Sachs, President Clinton, President Bush, many others. It's a long list of people. They said, look, we understand that Chinese are communists and they're kind of bad actors and they do bad things, but if they're willing to embrace something that looks a little bit like capitalism, they will grow richer. They will grow more sophisticated. The education level will go up. We will accommodate that by letting them join the World Trade Organization and the IMF, even though we know they lie, cheat, steal, because they will eventually get rich enough that they will be just like us. They'll throw off their communist masters, embrace a Western model, and it'll be just like Europe. We're all on the same team, democratic, quasi-socialist, but democratic, capitalist, liberal, in quotation marks, societies, and China will be just like us. That was the theory. I said it was wrong at the time, and time has proved that correct, meaning they're just rich communists. I said the only thing worse than a poor communist is a rich communist. And so we have created rich communists at the expense of our own workers, at the expense of our own economies. They are not like us. They're more communists than ever. Communists, atheists. The human rights violations are incalculable. If you're a Uyghur, maybe a Muslim Uyghur, or a Catholic in China, and you express any dissent at all, you will be arrested. You will be put in a concentration camp, a re-education camp, where you will be indoctrinated with communist philosophy. Maybe you'll get it, maybe you'll fake it, maybe you won't. But for those who apparently don't get it, they're strapped to an operating table without anesthetic, and their organs are removed while they're still alive and sold to the organ tourism industry, this huge multi-billion-dollar transplant industry in China, and then they cremate the bodies.
And that's real. I've heard rumors that's happening.
That's real. That's real. And what does that sound like? Killing innocent people and cremating the bodies. Have we seen that movie before? So that's who. I don't know why we do business with China at all.
Really?
I mean, I'm with Kyle Bass on this. I know Kyle. He's brilliant and good, nice guy. But he sees this for what it is. I see it for what it is. And I've been to China enough, and I've been out of the big cities and got mud on my feet, going to construction sites and ghost cities and talk to Communist Party officials. And so they're
because you can't see this in the main cities, right? You won't get that feel in Beijing and Shanghai. You have to get out west.
No, they got to move the organs around. They got to move the kidneys and hearts around to where they're needed. But meanwhile, the victims are being cremated. So that's who you're dealing with. They're not getting more like us. They've elevated Xi to, first of all, president for life. There used to be this, you got two 5-year terms, and then in your second term, you you kind of announced or anointed your successor, who would then pick up the reins at the end of your second 5-year term. That process was, which is driven by consensus, was working very well and giving China a little bit of stability. Xi tore it up. He's in his second 5-year term now, but he did not announce a successor, and they, at the last National Party Congress, they changed the rules so that he can stay on indefinitely. So he's president for life. They also created something called Xi Thought, which is a big deal because it elevates his ideological musings to the level of Mao thought. He's only the second Chinese leader to get that designation. All the others, you know, okay, you're president of China, head of the Communist Party, whatever, but they were never treated on a par with Mao. Xi is. So we have Xi Thought. We have, you know, gross human rights violations, geopolitical confrontation, near war in the South China Sea, you know, testing the boundaries with India, pardon me, all the, you know, intellectual property theft, lie, cheat, steal through the economy. Their numbers are fake, by the way. I'm sure you've heard of something called Goodhart's Law, and which is very valuable. Goodhart's Law says, when a metric becomes the object of policy, it loses meaning as a metric. So in other words, if you compute your GDP honestly, it's valuable information. It tells you what your economy is doing. But the minute you target GDP as a matter of policy, it loses meaning because you're just manipulating to a result.
And that's what they're doing.
That's what they're doing.
How does this play out? They also make all of our electronics.
Well, we'll first of all, we'll start making our own. And this is a big deal because U.S. companies are watching this now. Apple's although you know, Chinese value added in the iPhone is about 6 or 7%. 100% of the cost of an iPhone is treated as a Chinese export and a U.S. import, but their value added is only about 7%, give or take, because they buy the Gorilla Glass they buy from Germany, the circuits they buy from Japan, they buy other components from South Korea, so they have to pay as much as they get, and then they're just assemblers. These are Lego-style assembly jobs.
They do it better than anyone else can right now.
Correct, and you know, don't underestimate the extent of the poor working conditions, slave labor, prisoner labor, some of the things that go into this.
Okay.
But American companies are getting the wake-up call. They're getting the message. You know, Tim Cook talks to the president on a regular basis, and what they're doing, this is a very big deal. They're moving the supply chain origin to Vietnam, Thailand, Indonesia, and these are 10-year decisions. You don't move your factory from China to Vietnam and then move it back next year if things are good. You keep it there. Again, these are major fixed assets, major long-term investments. Right. So if you move it out, you're not coming back, maybe ever. And so these are permanent losses of jobs to China. And their GDP is overstated, grossly overstated. My adjustment gets them down from, round numbers, from about 6.2% to maybe, a little under 3.8 or so. But I've seen other scholars whose opinion I respect say it's more like 2.5%, and some say 0. Okay. So China is, the growth slowdown is abrupt, it's material, and it's getting worse. And so what'll happen is Xi's status is now at risk. I mean, okay, he may be president for life and Xi thought and all that. He may be the most powerful leader since Mao, but the Cultural Revolution got a little bit out of control for Mao too. And so the Politburo, they're going to be careful, but they may get rid of Xi at some point. Or you may see social unrest. You may see Hong Kong writ large. And Hong Kong's not going away. That situation's not getting better.
What does that tell you when you see the protests in Hong Kong happening?
Well, first of all, China will invade. They kind of already have, so little green men in Ukraine. We got guys in white T-shirts, but they're paid government thugs. They haven't sent in the People's Liberation Army, but they have an armed paramilitary police force. They're already in there, and they'll do more. The violence will get worse. The social unrest will get worse. I've been gone to Hong Kong for 35 years or more. It's interesting. If you had asked me in the early 80s, and when I first started going to Hong Kong, just describe Hong Kong. I would have said, well, it's the second most vibrant city in the world after New York. New York would always be number one, but nightlife, energy, finance, attitude, everything about Hong Kong was just, amazing.
I was there in like '84. And
Okay, so
I got a feeling. I was a kid, but still, I mean, it was a city. It was a real city. It was happening. There was the financial market, all that stuff.
Right, you got the sense. Every time I went back there, and I was there last year, it got worse. It got more subdued. People got more depressed. And then in the 2000s, I could really detect the funk. It's like, yeah, we're here, we're working, and we're a financial center, but this is no fun. And, we're kind of looking over our backs.
And you saw all the major banks moving to Singapore as well.
Correct. And last time I was in Hong Kong, I was giving a speech, very high level. The Asia Society was hosting it. And somebody took me aside and said, Jim, be careful what you say. And I had never heard that before, not in Hong Kong. I mean, someone might have said that in Beijing or Moscow or someplace, but not in Hong Kong. So, and I said what I wanted anyway. I was getting out the next day, but it's bad. Well, it's obviously bad because there are violent demonstrations and a few people have died and more may die. But that's going to get worse. That genie's out of the bottle.
Okay. I want to talk about Trump. And for anybody that's joining us late, we've made a previous video where we're talking about a lot of the trading strategies around your ideas in the book. And there's a link below. It's londonreal.tv/Rickards. It's not going to be on YouTube or our website. It's a special link. Talk to me about Trump, the impeachment, the re-election, and the ramifications of that on the economy or the next crash.
Okay, I will be happy to do that, but just a quick footnote before I do. And on June 20th, 2016, I stood in front of a camera in the London Eye. We actually rented one of those modules to do some filming. And I said, the UK is going to vote to leave the EU. They're going to Brexit. And you should short sterling and buy gold now to prepare for that eventuality. Now, at the time, the polls, the pundits, it was 75% remain. David Cameron was happy. The UK was going to remain in the EU. I said, no, they're going to leave. For months afterwards, I got notes from people. Thank you, Jim. Thank you for putting my kids through college because I did that trade and made a lot of money on that. In the last week of October 2016, I was actually on book tour. My book, The Road to Ruin, had come out then. And I was going around the world, and I was in Australia, Europe, and New York, with days before the election. In one case, it was 4 a.m. New York time, election day. The polls hadn't opened, but we were broadcasting in Europe with Francine Lockwood at Bloomberg. And I was asked, who's going to win the election? Oh, I was with another guest, and they asked the other guest, who's going to win the election? And he said, look, we're all going to be in bed by 10:30. I mean, Hillary's going to win in the East earlier than her husband did in 1992. We're not going to have to wait for results from the Midwest. This will all be over. We'll all be in bed by 10:30, nothing to it. And Francine's a very nice lady, turned to me and said, Jim, who's going to win? I said, Trump's going to win. I said, we're going to be up late. It'll be close, but Trump is going to win. And she, she's a smart lady, but she kind of like turned white and got flabbergasted and said, well, is the turnout going to be different or are the polls wrong? I said, both. And I said, and I just took her through it. And I'm very analytical, but here's my point, Brian, when you ask about Trump.
And how did you know that?
It's model-based. I have a model that I use Bayesian statistics, something I learned at the CIA. I hadn't used it a lot before the CIA, but I learned it when I was there, and it has huge applications, rarely applied to politics. Let me just give you a concrete example of how you can deconstruct this. So betting markets, I did this on both of these, but betting markets were, it was about 75% Remain and Brexit, and 90% for Trump. And I want to say, the wisdom of crowds. Look at these betting markets. There are thousands of people or millions of people, whatever. We can distill the wisdom of crowds. What's the name of a book by James Soroki? People don't understand the wisdom of crowds. The wisdom of crowds that he talked about was, how you're at a county fair. How many jelly beans in the jar? And the point is, 1,000 people making random guesses, if you average them, will be more accurate than a physicist sitting there, measuring the dimensions of every jelly bean. Guess the weight of the cow. Again, 1,000 people will be more accurate on average than some scientist trying to guess the weight of the cow. That is the wisdom of crowds, but it only applies to simple problems. Generally, the more complex the problem, the more expertise comes into play. But people don't understand bookies. The reason the bookies were giving Remain short odds was because the money was not equally distributed. In other words, the people betting on Remain were big shots in the city betting, 10,000 pounds. The people betting on Leave were, everyday, Brits betting, a couple of quid. And the point is, bookies don't make odds based on the number of bets. They make odds on the weight of money. So all the money was on the side of Remain. But in a voting booth, money's not involved. Every vote counts equally. So what I said is, don't look at the odds, because the odds are made to short where the money is, so the bookies don't lose money. Tell me how many bets were made each way. I want to know the number of bets. I don't want to know the odds, and I don't want to know the money. Tell me how many bets. Well, if you asked that question, you found out that there were more Leave bets than Remain.
Okay.
So that was a poll, but you had to know where to look for the data.
And you were seeing similar things in Trump in the election.
Correct. Okay. So, well, Trump was even easier in some ways because Hillary was ahead in all the polls. So, okay, you got to read the footnotes and read the methodology. There are more Democrats than Republicans in the United States. That's true. So if you're trying to do an accurate poll, you would have more Democrats in your sample. But they oversampled the Democrats. A good sample would be, say, 54% Democrats, 46% Republicans. But they were doing 58-42 or 59-41. So they were oversampling Democrats. And within that sample, the Democratic sample, they were oversampling African Americans. But that creates another skew because African Americans will vote 90% Democratic. So if you include African Americans in your oversample, you're excluding white Democrats who would vote for Trump. Well, that's what happened. White Democrats voted for Trump. So, but if you knew what I just said, all you had to do is take the polling result, look at the sample methodology, reverse engineer it, and every time I adjust it, I got Trump ahead by 2 points. So that was one of many. But my point, Brian, is that these are model-based. They use good applied mathematics. They use scientific method. Got to filter out your personal bias. I vote for who I vote for, and so does everyone else, and that's fine. But don't let that get in the way of your analysis. Okay. And little things like I took a Greyhound bus from Spokane, Washington to Moses Lake, Washington, in the middle of the desert in Washington State. I don't know too many Wall Street, Washington hotshots or analysts who are doing 3-hour Greyhound bus rides, probably none. But when you do that, you see people who put signs up. And I saw Trump signs everywhere, and I didn't see one Hillary sign. It's work to get a sign. You got to go down to the local political club and get the sign and put it in your lawn and hope somebody doesn't kick it down or spray paint it or whatever. It shows some commitment. And I was seeing Trump signs everywhere. And then March 2016, and this was before the Indiana primary, and Trump was ahead in delegates, but everyone hated Trump, even the Republicans. You had the never Trump Republicans. And one by one, Trump knocked down, Scott Walker, Marco Rubio, Jeb Bush. And the last guy standing was Ted Cruz. And Ted Cruz is popular with evangelicals. The Indiana primary was coming up. It's a strong evangelical state. And everyone said, aha, this is where Cruz beats Trump. The momentum shifts. He'll get some delegates. We'll get to the convention. We'll deadlock the convention, broker it, and Cruz will be the nominee, and that'll be the end of Trump. This is the Republicans talking, not the Democrats. So I go down to an evangelical compound deep in the Ozark Mountains on the border of Missouri and Arkansas. Again, I don't know too many of my peer analysts who did.
And you go down there for research reasons.
I was down there for a reason. I was actually invited down there, but I went. And this was 2 hours from Branson, Missouri. Branson, Missouri is in the boondocks. So imagine a 2-hour drive.
I can't imagine.
So anyway, we have a large live audience. We're doing a televised thing. I'm a guest. And I'm thinking, I usually keep away from politics, but it affects economics. I'm thinking to myself, I got to tread lightly on this whole Trump thing because these are all serious evangelicals. They're in a compound. And I know they love Ted Cruz and they hate Donald Trump because he had 3 wives or whatever. I said, I got to tread light. But I just happened to mention Trump sort of en passant. They rose to their feet and started applauding and screaming. They were all for Trump. And I said, okay, the evangelicals are for Trump. And going back to an earlier conversation, it was part of the planning for Rick Perry's campaign in 2012. And Governor Perry, who was, contrary to what some people think, is a very smart guy and nicest guy in the world. He said that we were having this conversation in 2014, getting ready for the 2016 campaign. But he was talking about Mitt Romney in 2012. And he said the reason Mitt Romney lost was because 5 million evangelicals stayed home because they wouldn't vote for a Mormon. I know it's politically incorrect to talk about religion, and I respect people's religions, but as an analyst, it's like, oh, wait a second. Because they didn't vote for Obama. They weren't going to vote for Obama, but 5 million evangelicals stayed home. If they come back to the polls, which was Perry's insight, and then what I gather from the evangelicals is, they're coming back and they're voting for Trump, and Trump wins.
Okay. All right.
So my point is, it sounds anecdotal, but it's not anecdotal because these are all in a Bayesian model. When something like that happens, whether it's a yard sign or evangelical applause, you say to yourself, what is you start out with a priori hypothesis about who's going to win, but you say, I could be right or wrong, I need more evidence. And then as these things happen, you say, what is the conditional probability that the second event would have happened if my initial hypothesis was correct? And you work backward. This is why statisticians hate it, because you work with it, you form the hypothesis and then test it, as opposed to the other way around.
Okay.
But I kept saying stuff. I said, Trump's going to win. So now I'll say Trump's going to win in 2020. And my model right now shows him, 2 days ago, it was at a 67% probability. But I upped it to 69% after this impeachment thing came along, because impeachment is going to help Trump. So
impeachment helps Trump.
Yes.
And I can see this, but tell us why. Yeah. So 69%, you have him winning in 2020.
Right now, 69%. But there's a theta, which is just a time decay factor. By election day, I expect it to be 90%, because it's going to favor, Trump's odds are going to go up about 2% a month, maybe a little bit more from now until election day, which is still 14 months away. So give him another, 28%. So he's going to be at 90 or so
90
by election day, but he's not there yet.
He's been posting on Instagram his opinion polls every few days now, and it's gone from 51 to 52 to 53% approval rating.
Correct.
I don't know if that's correct or not, but it's interesting to see that and him posting it.
They're probably good, and that means something. But I already explained why I don't over rely on the polls.
Right.
Or you got to dig deep. But it's a multi-factor model. But the biggest single factor, the heaviest weight, Trump's odds of winning re-election are the inverse probability of a recession between now and the summer of 2020. Every president who sought re-election in the 20th century was re-elected unless there was a recession. Because people go, oh, well, what about Bush
Sr.?
Bush Sr. and Jimmy Carter, they lost. I said, yeah, and they had recessions. Jimmy Carter had a bad recession in 1980, and George Bush had a bad recession in 1991. They lost. But if you don't have a recession, you win. And there's a, again, just go back as far as you want, at least in the 20th century. So if we don't have a recession, so the question is, what are the odds of a recession before the summer 2020? Right now, the best information is about 35%. You can argue it higher or lower. That's probably a little high, but let's take it for 35%. That means Trump's odds of being reelected are 65%, the inverse of the 35.
Yeah.
I gave him 2 more for impeachment. I'll give him 2 a month between now and and next summer, and he's going to win.
And impeachment, why does that help him?
Because he may or may not get impeached, but let's say he does. And there's a significant chance of that.
Because also, just being impeached doesn't mean you're out of office. Because
Correct.
Bill Clinton was impeached.
Yeah.
It's such a weird word, because when you hear that word, it sounds so serious. But then there's impeachment proceedings, and then there's the actual impeachment, and then you can still stay in office after you're impeached.
Correct, and you will, unless you're removed.
Right. So could he get reelected after being impeached? He could.
And he would be the first one in American history, because we've had 2 presidents who were impeached, Andrew Johnson and Bill Clinton.
And only Andrew was removed. Bill stayed.
He was not. Andrew Johnson was not removed.
Oh, he
was acquitted, and they had 2 Senate trials on different sets of charges.
Okay.
He was acquitted both times, and Bill Clinton, 1 trial, was acquitted.
Okay.
So no president has been removed from office.
And Nixon walked.
Correct.
Because he thought it was stacked against him. Do you think if he would have stayed, he would have been impeached and thrown out?
Nixon would have been impeached and removed. He would have been convicted in the Senate, and he was informed of that, and he chose to resign.
Okay.
But he was not impeached.
Right.
Process was underway.
Okay.
So I go abroad and all over the world, and people say, Jim, I don't really understand American politics. I say, well, don't worry, Americans don't understand it either. But first of all, you're right. Impeachment is a charge. If in the criminal system we'd call it an indictment or a charge or whatever the equivalent is. So you've been charged with something, but now you get a trial, and the trial takes place in the Senate, which is controlled by Republicans, and the standard to convict is 2/3. So you need 67 senators to vote for conviction. There are only 46, there are 44 Democrats and 2 independents, but let's count them as Democrats. There are only 46 Democrats and independents who would, in all probability, vote to convict. So you have to peel 21 Republicans, 21, not Mitt Romney and Ben Sasse, but 21 Republicans have to come over. They're not going to come over. Mitch McConnell and Lindsey Graham have already said this is going to be like a 3-day trial. It's going to be over, by breakfast.
So this is great press for Donald, and he's going to get great fundraising on the back of it.
He already is. He raised $5 million yesterday, one day, on a letter or something.
Because it gets all of supporters concerned. So it's like, we got to really push now. We got to go hard to get this happening. Whereas before they might think it's a shoo-in.
Right, and I explained on Twitter. I said I've upped Trump's odds because of impeachment. But here's why: impeachment, acquittal, will not change a single mind. If you hate Trump, you're all for impeachment. You want him kicked out. And if you love Trump, you think this is an injustice and whatever. And sure. I could write I'm having to be a lawyer. I could write a legal opinion that he didn't break any laws, and somebody else would write the opposite opinion. Fine. And the independents were like, couldn't figure it out to begin with, and they still can't figure it out. And that's okay. You're not going to change a single mind, but you are going to drive turnout. So people who support Trump, who might have it's raining, I don't want to go vote, they're going to go vote, and they're going to take their spouses and anyone else they can find. So it's going to drive turnout. And in a closely divided country, which is what we have, turnout is actually what decides the elections.
Interesting. Okay, how does this affect a pending financial crisis or the financial outlook of America and the world, Trump being, I guess, reelected?
Right. Big picture, it's bullish because the markets love Trump. People hate to admit it, but he did cut taxes. He did cut regulation. He has revived fracking. He has revived the coal industry. He is promoting exports. He is getting jobs back in the United States. The whole thing with tariffs on China, and we're going to do this to Germany, in another month or so. This is Robert Lighthizer, who's the U.S. Trade Representative. This is not his first rodeo. He was a senior trade advisor to Ronald Reagan in the 1980s, at a time when the Japanese car industry was destroying Detroit. Detroit couldn't make a good car. Japanese made excellent cars, cheaper, better, et cetera. Americans were just buying them as fast as they could, and Detroit was going out of business. And what Lighthizer did, he put massive tariffs on Japanese imported cars. But what he said to the Japanese back channels, look, you can sell all the cars you want in the United States, that's fine, but you got to build them here. Here's the tariff wall. You have to jump over the tariff wall. And I see my friends, in New England or whatever, in their Japanese cars. I say it's a nice Tennessee car you got there, because they're built in Tennessee. Right. And the richer people, they're driving around and they got a nice German car, BMW. I said, well, that's made in South Carolina, actually. The only real German cars left in the U.S. are Volkswagen, Porsche, and Audi, but the BMWs are made in the United States. Hondas are made in the United States. So what they said is that the tariffs are not to collect money or to keep you out. Come on in, but build them here. Hire the workers, create high-paying jobs with benefits. So that's our message to China. You want to sell cars in the United States? Come on in, but build them here. And we're going to say the same thing to Volkswagen and Audi. And so that is the playbook, and it's the right one, because what Trump says, let Germany worry about German jobs and let China worry about Chinese jobs. I'm going to worry about American jobs, and that's exactly what they're doing. So that's good for the economy, and he's doing a lot of other things that are good for the economy, and the market sees that, even if they won't admit in public that they like him. What's your alternative? I mean, Joe Biden's going down in flames. I mean, this whole thing with Trump, he's supposedly impeached because he asked the Ukrainian president to have a look at Biden, who was like utterly corrupt.
I mean, you're a lawyer. Is
Yeah.
that illegal, or is that a breach of presidential behavior?
It's absolutely not illegal.
Okay.
And for the benefit of your viewers, Brian, yeah, the impeachment clauses are actually in the Constitution are interesting because they're spread between Article 1 and Article 2. Article 1 are the legislative powers. Article 2 are the executive powers. But I can't think of any other provision. Article 1 says Congress can do this. Article 2 says the president can do this. But to spread impeachment over both articles really says that we're intertwining the legislative and executive branches in unusual ways. We're breaking down the separation of powers for this particular purpose because it's so important. And for that matter, the Article 2 reference to the impeachment powers says the Chief Justice shall preside over the trial in the Senate. So you're bringing in Article 3, you're bringing in the judicial powers. So this blends the three branches in a way that no other constitutional provisions do. And that gets into a lot of other legalities. But there's also something called the Take Care Clause. And the Take Care Clause in Article 2 says the president shall take care that the laws be faithfully executed. So you're telling me that just because you happen to be a political opponent of Donald Trump, you can break every law around the world with impunity and immunity, and the president is powerless to energize the U.S. judicial system to have a look? Is that what you're saying? Because that's what the Democrats are saying. And all he did with the president of Ukraine was say, would you have a look? There was no quid pro quo in there. I know people imply it, but the quid pro quo was, hey, I'm Joe Biden, hire my son Hunter, who's incompetent, knows nothing about natural gas or energy, at $600,000 a year, and I'll give you $1 billion of foreign aid.
Gotcha.
And you got 6 hours to make up your meeting. Have you seen that video clip of Joe Biden's mouthing off to the Council on Foreign Relations, and he's telling the story after the fact. He goes, yeah, I told him to fire the prosecutor. And I said, I'm out here in 6 hours. You got 6 hours to fire the guy, or you're not getting your $1 billion. And somebody said, well, you don't have authority to do that. He goes, call Obama. Because Obama had given Biden the authority. He was point person on Ukraine, all because the prosecutor was investigating his son Hunter. That's what stinks. Anyway, the president's allowed to look into that. The president can say whatever he wants to a foreign head of state. Why is the intelligence community spying on our own president and leaking it in ways designed to invoke the impeachment, which it has now done? So we got a little civil war going on in the U.S., but it's only going to help Trump for the reason we mentioned.
Yeah, quite one. Okay, this is good stuff. Stocks to avoid, the high valuation, high growth tech and media stocks. And I would love to talk about Facebook, Netflix, Amazon, and also some of the other assets out there. Again, we filmed a video before this where we go deeper into your trading strategies. The link is below, londonreal.tv/Rickards. As you can obviously see, Jim is very well knowledgeed in these things. Talk to me about these FANG stocks.
Right.
Because there's something that you've got an interesting take on.
Well, every day or almost every day, if you turn on our business media, CNBC or whatever, stock market at an all-time high. Well, maybe by, a small fraction of 1%, but basically stocks today are about where they were in January 2018. Stock market has gone nowhere in almost 2 years. Now, it had a crash in February 2018, and then it rallied back in the spring. And then we had another crash between October and December 2018, and then it rallied back in early 2019. We've had so there's been volatility. And if you have, perfect clairvoyance, you know how to buy low, sell high every time, good for you. But the fact is most Americans are passive investors, buy and hold investors. They buy index funds, et cetera. They ride out the roller coaster. And guess what? They haven't made any money in almost 2 years. So this is signaling. I don't think technical analysis has a lot of predictive value, but it has some. And when you see these multiple, hits the top, it goes down, hits the top, it goes down. So what's behind that? People don't realize the extent to which stock trading is automated, is not just automated, but robotic. So when I say automation, you're a seller and I'm a buyer, and we put our orders in and the system matches us up and we both get confirmed. That's been around since the 90s. That anonymous order matching technology has been around since the 90s. That's not what I mean. What I mean are robots are actually making the buy and sell decisions. Forget about the execution. They're looking at, they've got pre-programmed algorithms. They're reading massive amounts of data, speeches, 10Qs, 10Ks, whatever, newspaper articles, on and on and on. And they're making decisions independent of any human judgment. Well, that means you need an algorithm. Who writes the algorithm? Probably some 27-year-old engineer from South Asia who lives in Silicon Valley and doesn't get out enough. In other words, people who've never been to the stock market, never worked in real markets. And they kind of do what they're told, and they're good developers and good coders. So one of the best ways to make money right now is to actually front run the robots. What you have to do is figure out what the algorithm is and then just, sell out before they sell and buy in before they buy. But everything's stuck in a range. The Dow Jones Industrial Average is kind of between, 24 and 27. Yields to maturity on the bond market until very recently it broke out, but they were between like 2 and 3. Gold was stuck between 1250 and 1350. Everything was in a very narrow range because the computers say when Dow hits 27,000, sell them, and when it hits 24,000, shoot them in. Now that lasts until it doesn't. There can be exogenous inputs that cause things to break very severely, and that's where the ceiling comes in. Why have we not broken through the ceiling? We don't have the growth. Earnings are down. Interest rates are coming down. That's good, but they're coming down for the wrong reason. They're coming down because growth is slowing down, and we have disinflation, which is not bullish for stocks. So, so I look at that and say, this is what I call an asymmetric trade. You have very little chance of stocks going a lot higher, and a very good chance of stocks going a lot lower. They might not go lower, but if you're if you short them, you're not going to, and they just kind of sit where they are, you're not going to lose money because they're not going to go up. But when they go down, you make a lot of money. And the most likely candidates are the ones I mentioned, the so-called FANGs.
Yeah, what are the FANG stocks?
Facebook, Apple, the other A is for Alphabet, which is Google. Or actually, I guess G for Google.
And for Netflix.
Yeah, and for Netflix and Amazon. So it's Facebook, Amazon, Apple, Netflix, and Google, although it trades as Alphabet.
Right.
So that's FAANG. They're all good companies. They're all going to be around, but they're grossly overvalued. And if things head south, they'll head south faster than everything else.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
If you put your money in the bank, it's not your money anymore. It's the bank's money, and they'll give it to you if they feel like it.
Hi, Brian Rose here. Did you watch my recent London Real episode with former CIA consultant Jim Rickards? If you did, you heard Jim mention a massive government secret and the effect it could have on thousands of people. And yes, that might include you.
That's right, Brian. After 15 years of secrecy, I'm revealing this sensitive information on camera.
Jim's going on camera in just a few days to reveal this 15-year-old government secret.
The brief revealing video below could change how you think of me. I hope you understand. Click below to see it.
As you can imagine, this message is not sanctioned by the US government. So Jim has to keep this broadcast private. Only those on his list will get the chance to hear it. As a London Reeler, he's letting me offer you exclusive access for free. All you have to do is click on the link below or go to londonreal.tv/Jim and add yourself to the list. Once this goes live, you may never have the chance to see it again.
Due to the nature of this video, we are taking it down soon, so make sure you click below before it's too late.
Like I said, Jim's risking quite a lot to share this message with you. He told me he just can't keep it under wraps any longer, and I think you need to hear what he has to say. So click on the link below or go to londonreal.tv/Jim to sign up now. And I will see you at the free event.